Hello, everyone, friends. As of midnight last night, the markets opened this week with selling pressure again, following a 20% increase in oil prices. And of course, the Strait of Hormuz crisis is clearly ongoing. Even though Iran says we are opening the strait conditionally, countries other than the US and Israel can have their ships pass through here. Even though they say this, ships still don't dare to pass through the strait, and according to the latest data, more than 150 ships are still waiting in the strait. And after this sharp rise in oil prices, what do the markets look like at the weekly opening today? We're going to talk about all of these topics one by one. From the American stock market to Borsa Istanbul, selling pressure was dominant everywhere. The VIX, the fear gauge, hit critical levels. We're covering these topics one by one. First, I'd like to share this information. On the Venezuela side, 50 million barrels of oil under embargo have now started flowing to U.S. refineries. Trump announced it. Thanks to government subsidies and incentives, gasoline prices in the U.S. have dropped below $2.50, reinforcing his message of energy dominance. Of course, after oil prices climbed above $100, I'm not so sure how seriously Trump is taking this situation. In my opinion, it's clear that Trump is preparing the world for inflation, and this path will inevitably lead to global inflation. Trump thinks he's being very smart here. First, he put Venezuela under a blockade and solved the oil supply problem. Then he went to war with Iran and thought he wouldn't have any problems there. Look, back in the 1970s, during the oil crisis, Trump was a sharp contractor who had just taken over his father's business. There were oil supply problems and long lines in the market, and Trump saw that period very clearly. That's why he started by solving that problem first. But even that won't be enough, because the world isn't just America. And we're all going to watch and see how this plays out in the markets. Now, I'm going to talk about the markets and discuss the situation in each one separately. Before I get started, as always, a kindly ask for your likes and comments on this video too. As you know, your support is really valuable to me against YouTube bots and algorithms. And after asking for your support, let's start analyzing the markets now. There is certainly a great deal for us to discuss, and we are now entering into a period where we need to monitor the global financial markets extremely closely. Make sure you don't miss any of the videos. We're going through a period where it's really hard to stay afloat and not lose money. Let's start analyzing the markets with gold. One of the biggest questions investors have is, if there's a crisis and the markets are full of fear, why isn't gold going up? People are asking, isn't it likely that we'll see even more gains in gold? Look, first, I'd like to show you the structure on the chart. According to the cloud indicator on my chart, roughly the $5,000 level was a solid support and a buy point for new investors. At this point, after the recent events, with oil surpassing the $100 mark, the fear index breaking through critical levels, and investors caught up in this fear scenario, here's what needs to be said about gold. For gold, we're seeing that cycle where big investors are converting to cash for liquidity. In other words, the sudden spike in oil prices has led major funds and brokerage firms, those holding short positions in oil or positions in energy-based derivatives that have gone against them, to sell their most liquid and profitable asset, which is gold, in order to meet margin calls. And actually, this is a situation that applies to everyone. So if there's fear or a crisis in the market and everything is losing value and you need cash, you sell your most profitable asset to meet that need for cash. This is exactly the main reason behind the selling in gold. And in my opinion, this is a temporary situation. That's why, during this period, gold isn't rising, but it's not falling either. It's going through that cycle we talked about. Actually, there is demand for gold, but because strong selling pressure is suppressing this demand during this period, we haven't really seen much of its impact on the price. During this period, and in the coming period, gold will continue to be the #1 choice for safe haven demand, and in my opinion, the upward trend in gold will clearly continue. In a moment, when I show the fear index and the American stock market, I think you'll understand the situation a bit better. And in my opinion, when I look at the market during the weekly close and today's weekly open, I don't see any weakening in the trends for gold. Look, the same situation applies to gram gold as well. We've talked about how the cloud indicator is being very well maintained in gram gold too. It hasn't even dropped below this level. In other words, it hasn't even tested the cloud. Because there's also some movement in the dollar per teraliter rate. That's a whole other aspect to the situation, friends. Look, it's important to really understand and grasp this issue. We're in a period where global risk and stress are extremely high. And since these events are happening just across our border, very close to us, there's also an impact on our markets. The stock market is under serious stress. The dollar per teraliter rate is also under serious stress. Of course, the central bank is intervening and taking its own actions in response. But we shouldn't forget that every partial increase in the dollar per teraliter rate also affects the price of gram gold. So for us, for local market investors, gram gold is an asset that is influenced by both the dollar per teraliter rate and the ounce price of gold. And we're currently in a period where it can be affected by both at the same time, or at least by one of them. That's why it's important to keep trusting in gold. This is exactly why you should keep holding on to your gold. Of course, this is just my humble personal opinion. You should do whatever you think is right, however you see fit. Is there a similar scenario for silver? To some extent, yes. I've been saying this and explaining it for a long time. It doesn't have as healthy a trend structure as gold, but ultimately, starting from the $70 range, it made a move that brought gains to its investors. After that, it also showed strong support in the 79 to 83 range. If it manages to hold steady above the 79.73 level this week, then I think it is safe to say that it is highly probable for it to start a new upward wave. And for those following silver in grams, I had mentioned that the 113 TL level is an important support. Look, when we check the daily chart here, it came to this area several times over the past week, but it didn't lose this level. This is the solid support level for silver in the TL pair. If this level is lost, instead of hoping for a new rally in silver, I would prefer to be on the selling side. If it manages to break above the 121 Turkish lira level this week, it will technically enter a strong upward zone. In my opinion, what needs to be done with silver is very simple. If it loses the 113 Turkish lira level, I think investors holding positions in silver should consider exiting again. This is the clear level to watch. Let me show you the VIX index. When this index rises above the 30 level, it's one of the factors indicating that there's significant volatility in the markets and that a crisis scenario is being priced in. And right now, this index is above the 30 level. Today, we might be experiencing the day with the most fear in the markets. But in my opinion, investors need to be in a wait-and-see mode for the next few days. Because in all markets, within this 1 or 2 day period, they're likely to make a move that will at least push the markets up a bit. If there's another drop after that, we'll probably be talking about it in our next video. At least, we'll be discussing these things during the YouTube members-only chat on Wednesday evening. And here, within this 2 day period, I'll form an opinion on which direction the markets might move and share ideas about taking new positions. Look, there was a level one was watching in the American stock market, specifically for the NASDAQ 100, the 23,950 zone. The market dropped down to this zone, but today there was a rebound from there. This suggests that today and tomorrow, stock markets will be in wait-and-see mode. The same goes for Borsa Istanbul, which is facing selling pressure. It has also dropped below the cloud region, and technically, the area it's in right now is starting to show signs of weakness. Just like the American stock market, Borsa Istanbul is also in a risky period. In short, what I'm saying is that investors will be in a wait-and-see mode for the next few days. They will watch the new movements here and make new decisions accordingly. I share the same opinion. We'll watch this area for a bit and then make our own decisions based on that. We can say that, during this period of pressure, one of the most stable markets has actually been the cryptocurrency market. It neither dropped nor rose. Bitcoin continued to move within the same range. It showed a trend where it roughly moved between $61,000 and $70,000. Since Bitcoin tends to price in market declines a bit later, in other words, it signals drops earlier, I didn't expect any additional declines from Bitcoin during this period. I was expecting the declines to remain a bit more limited, and Bitcoin continues to show a sideways movement. There aren't any major fluctuations in the price of Bitcoin or altcoins, but the cloud indicator has started to move down a bit more. If it surpasses the $73,000 level, which was its last test area, Bitcoin will enter a positive cycle. Globally, in a cycle where gold and silver are priced positively during crisis scenarios, I would have expected Bitcoin to be a bit more positive along with them. That's why Bitcoin lagging this far behind is a huge disappointment for me. And I think I've had the chance to mention this a few times in recent broadcasts. We can still say that, in terms of global markets, the most unhappy group of investors are altcoin investors. I'd also like to point out that in the short term, Bitcoin's resistance level here is at $69,000. The cloud indicator here also turns green again at this level, and we're in an area very close to that. And within this area, I'd like to mention that the current resistance level for Ethereum is $2,129. Without even reaching this point, the area we'll now consider as the positive zone will be this region. For XRP, we can also say that the current level is $1.5. As the cloud indicator moves downward, the areas where it can enter the positive zone have also shifted downward in the same way. In other words, in order to technically say that the crypto market has turned positive, our thresholds are now even lower. And with just a small move, they need to break above these resistance levels. Once these resistance levels are surpassed, in my opinion, the crypto market will have technically entered a positive zone, despite the ongoing war and the global negativity. And I hope that this week we'll see signs of this and be able to talk about them. We'll be analyzing these market movements and closely following all the updates. Other than that, there's nothing else to add for now. No matter what the prices are, I hope you're doing well. See you in the next video. Take care of yourselves. Subscribing to my channel and turning on notifications is an investment advice for yourself. Stay fully informed about all the latest developments, well before they even begin to happen.